Hey guys, the Fed meets this week. I'm going to keep my powder dry, not buy anything until after the Fed. At the same time, though, the indexes are ready to explode. Some to the upside, some to the downside. Let's watch today's video and find out which one it is. Let's go.
Again, guys, like I said during the intro, we've got an absolutely fabulous lineup of stocks today. Anil, aloha.
Good to be here. Aloha.
And it's so good to be back. It was nice to take a couple of weeks off and just kind of chill out, but had a lot to get done back in Arkansas, and also celebrating my granddaughter's 10-year birthday. She's the oldest grandchild, and so that was really, really special.
And sounds good.
Yeah, and then she's roped me in. She's going into she and her other grandmother are coming to visit us here in October. And she's roped me into going horseback riding, taking her horseback ride on a trail ride along the beaches here in Hawaii. So that'll be fun. So how's the trading been over the last couple of weeks, Anil, for you?
Kind of slow. I got stopped out in many of my positions. So I have to deal with it.
Yeah, so mine too. It's been like I've been building some great positions, but one of the things I've noticed, and I shared going forward, is that it seems as if the almost every one of the financial networks is trying to stir up our emotions. And whenever the emotions get involved in stock trading, guess what happens? We can oftentimes make dumb decisions, and we want to make sure that we're not doing that and making dumb decisions. And sometimes it's best just to stand back, don't do anything, and even just practice your trading for a while. And if you're wondering about how to practice, I'll leave a link up here in this corner here that basically shows you how to practice on the Thinkorswim's on-demand platform. It's a really good video, and we'll provide that link for you. And a link will also be in the first comment of the session. So what are we going to cover today? Interesting times. And one of the things that hit my eye this morning, Anil, was tech leads stock slump as Wall Street eyes the Fed. The Fed appeared to be locked in to do nothing this coming session, and so it's like a bunch of saber rattling, and again, just one of those things, pushing the emotion button to try to get us to make dumb decisions. And so this is one of the reasons why we want to stick really tight to our strategies, our plans, and our systems. And so that's what we're going to be looking at today. So with that, again, just a real quick reminder, we're going to be covering 3 stocks and 1 leverage ETF. That leverage ETF, believe it or not, has the potential of doubling before the end of the year. So you don't want to miss this session. So let's go ahead and jump over to our next session. And let's take a look at our indexes. Here's where as you can see, we had a nice little tick up going into the last 2 weeks of September. As Anil said, I've been a little bit slow also, but we did basically pull up our, picked up a couple of percentage, and we're still beating the S&P nicely for the year. And so with that, let's go ahead. Let me pull up my little guy here, man. There we go. So let's go ahead and take a look at the indexes. Now, the indexes, what I'm going to do, folks, is I'm going to take a look primarily at I will probably basically cover each of the indexes today, but it's going to be very, very quick, and I'm going to show you exactly where the index is of interest to me based on establishing high probability, low risk entry points where you can buy at wholesale to sell at retail. What I'm seeing here with the S&P as reflective of the come on, there we go, as reflected on the spiders is this. As you can see, we had a sell-off, rebound attempt, and then another sell-off here, held at the 50-day moving average. Very interesting. So my question is this kind of an ABC type of move that you see better on the weekly charts? And when I say ABC, here's what I'm looking at. Here's your first move down, A, B, and then C. If C gets down to retest that level there and or drops below it, which it could do, watch for it to stop at about between the 100 and 200-day moving average, somewhere right about there. That would be a good place to go ahead and lay in and that is at 426. That's a great place to lay in an alert. And also up here at the 431 level. And watch for prices to pull all the way back down to that level. That would be an excellent high probability, low risk entry point to have it trigger an alert for you. So that's what we've got going on there, especially if, prices could come down here to the uptrend line, just stop right there, or just continue to drop a little bit. As you can see, we're right at the 50-day moving average. So that's it for the S&P. The NASDAQ, almost the same identical pattern. Let me get rid of my other drawings there. There we go. Almost the same identical pattern. It is tracking down right on top of the 50-day moving average. I would say on the NASDAQ or on the Qs, I'd like it right off of this uptrend line. Be aware what can happen is prices can stop going down and go sideways until they hit that level and then rebound from there. That is oftentimes a very popular or a strong way for the price actions to move, especially if we're going to go into rally mode going forward. Let's talk a minute about the Russell, correction, not the Russell, but the Fed meeting this week. Anil, what's your concept or thoughts on the Fed meeting? If they raise rate, it'll kill the market. If they don't raise rates, I think it can promote a rally going into October. But it all depends on what Jerome Powell has to say in his news conference. What's your thoughts? And you need to unmute. There you go. Go ahead and unmute.
Sorry, I was saying I don't think they're going to raise the rate.
Yeah.
I think market will get a pop as a result, and that should be a good thing. If it goes the other way, we'll have to get ready for that too.
Yeah, without a doubt. And so they're estimating that they may raise rates one more time this year or between now and July of next year. But if you look at the Fed probability website, it basically shows that they're expecting around June, July of next year, right before the election, to lower the rates and as supposedly the economy continues to recover. IWM, just real quick, I don't normally cover IWM, but I think it's worth covering today simply because it is back down at a level of past support. Now, what's it going to do? Now, this is a pretty classic move where we came down, sold off, rally attempt, back up into a level of resistance, sold off to retest this low. So far, the retest on this level is holding, but it's looking suspect. And if we take out this level, watch for it to fall, I would say probably down to about, look for it to fall at least down to about 175, which is about, what is that, about eight points from where it's at right now. So that's what I've got with the Russell. Again, just kind of tacking down. The other way to look at this is also we broke out of the downtrend line here on the weekly chart. It popped up, came back down, is retesting at the trend line. And so the big question that has to be answered, and it'll be answered very soon, is will it kiss the trend line goodbye and take back off? Right now, we don't know. We don't know. So that's what we've got for the indexes. And I'll just cover this really quickly. One of the major complaints that people have, especially on taking stocks off of the IBD watch list, is that they're always overbought, and you'll see that if you've been trading the IBD stocks for a while. When the entity comes out on their watch list, you'll notice it's oftentimes extended. Well, the thing about it is you have to remember when something comes out on a watch list, one, the stock is going. Stocks are going to earning their way onto the watch list, onto your watch list. So this is a way that it gets initially on the watch list, but they are not meant to be bought immediately. They're bought to be watched and let the practice patience and persistence to buy the stock at wholesale. If I could get everybody into that mantra of saying, buy at wholesale, sell at retail, buy at wholesale, sell at retail, I think before you do any trading whatsoever, it will cut down on a couple of things. One, it'll cut down on your chasing an entity and price action. It'll also help you to just, keep your powder dry when it needs to be dry. And then one of the other ways to help you do this is just learn to use conditional orders to avoid impulsive and compulsive trade decisions. This here, being able to place orders after the market is already closed, can save you a lot of angst and frustration. And especially now with autopilot trading, we have it now where you put in a trade and it is truly a fire and forget, because your stop losses are taken care of, your profit targets are taken care of. And so, and we've adjusted things so that even if it comes close to your initial profit targets, it's going to slide in a trailing stop for you that'll make sure that that trade will at least break even. So that's a pretty good. I really love having discovered and being able to do that. Got great news for everybody who did the pre-order. Guess what? I got the editor's draft to my new book, Trade Your Way to Freedom. There is still time to do a pre-order on that. I will put a link in the first in the description, but also in the first comment section. And so my son and I are going through the reviewing the draft so that it will be out by when? Looks like the latter part of October, on schedule as promised. And like I said, if you are looking to, you can pre-order right now. And remember, if you pre-order the book before it comes out, you will get free tickets to an exclusive master class that'll show you all of my methods and my methods of utilizing the AutoPilot trading system that I've been using for a long time. But it is a proven system.
Hey guys, one of the things I like to do when the market is just kind of wonky like it is right now, I like to practice my trading. I do that with the Thinkorswim on-demand trading simulator. It's absolutely fabulous. If you want to know how to use it, there's a playlist right there that'll teach you exactly how to use this great tool so you can become a better trader. Hey guys, I want to jump back in and say thank you so much for your support as an autopilot trader. One thing you could do for me is share these videos with other like-minded traders. Let them know that there's a whole community out here of traders that are following the path to success, and I'd really appreciate it. So hit the bell, hit the subscribe, but more importantly, share and leave some comments. Aloha.